Hello viewers, welcome to my channel. I am Hasham. So now I am going to continue the previous topic of Introduction to Cost Accounting. Half of the chapter already I have covered in the last video. The remaining half I am going to complete in this video. So watch the video till the end so that you can be able to write the theory question in examination regarding the introduction to cost accounting. So already I have discussed about the meaning of the term cost accounting, features of cost accounting, objectives of cost accounting, functions of cost accounting, scope of cost accounting, benefits of cost accounting, objections of cost accounting. All these things I have discussed in the previous video. Now I am continuing the lecture, so watch the video till the end. Now I am going to start the next topic, limitations of cost accounting. See, there are many benefits of cost accounting already I have discussed in the last session. Now some limitations are also there in the subject cost accounting. The first limitation is lack of uniformity. There are no uniform rules, principles which will always be followed by every cost accountant. The rules, the principle, the procedure may change. For example, in case of pricing of issue of material, we have different methods, FIFO method, LIFO method, average method, like that. Similarly, the absorption rate, the absorption of overhead, different methods of absorption overheads are given. So every method will have different figure. So no two cost accountant will come to the same conclusion because there is no uniformity in the procedure, in the rules, in the principles. The lack of uniformity is the first limitation of cost accounting. Secondly, estimates. Many times, in many cases, the cost accountant has to estimate a particular cost. So when estimations are applied, definitely subjectivity will creep in. When subjectivity is there, there is no uniformity in the subject of cost accounting because two cost accountant may arrive at different figures on the same topic depending on the estimates they have made. Now, suitability. There is no suitable method of cost accounting which can be applied in every case. So every business organization will have their own peculiar features. So there is no single method of cost accounting which can be applied in all cases. So we have to find out which method is suitable to our business. Accordingly, we apply that method of cost accounting. Last one, role of management. Ultimately, what are the expectations of the management? Whether management is taking into account the information provided by cost accounting or not. So if the management does not accept the information provided by cost accounting, that means the cost accounting will fail. So ultimately, cost accounting is applied mainly to help the management by providing the information. So if the management has not accepted that information, then the whole cost accounting will fail. So these are some of the limitations of cost accounting. In examination, you may get what are the benefits and what are the limitations of cost accounting. Next comes essentials of good costing system. See, this costing system, automatically it will not be good. So what are the essential qualities of a good cost accounting system? Now we are going to study. The first one, simple. The cost accounting systems should be simple to implement, easy to operate. Otherwise, if it is very complicated system, then we cannot be able to achieve the objectives of cost accounting. The system should be easily understandable and very simple to operate. Secondly, practical. The accounting system, the cost accounting system should be more practical rather than idealistic. So the cost accounting system should be more practical. That means the approach should be very much practical. Then third one, suitable. Whichever costing method you are applying, that should be suitable to the nature of organization. That means we have different types of organization, like some organization will produce the goods in units, some will produce in bulk quantity, some will produce the goods according to the specification of the customer. So different organizations we are having. So the costing system should be suitable to the nature of the organization. Accountability. That means whoever provides the information to the cost accounting department should be accountable. The cost accounting department will get the accounting information from different areas, from material, from labor, from overhead. That means every person should be accountable for supplying the information to the cost accounting department. Next, reliable. The information provided by the cost accounting department should be reliable. That means it should be, prepared with full responsibility. Next one is cost effective. The cost incurred in managing, in maintaining this accounting system should be lowest, should be minimum. Otherwise, what will happen if we are getting less benefit and more cost? That means it will become uneconomical. This cost accounting system will become uneconomical because we are spending more money to maintain the system and we are getting less benefit. That should not happen. Then last one is flexible. That means cost accounting system should be such that it can be flexible according to the changes in the conditions, changes in the environment. So these are the essentials to be followed while implementing cost accounting system. The next is financial accounting and cost accounting. See, these two are separate accounting systems. The financial accounting is concerned with recording, classifying, analyzing, interpreting the financial information so that the other outside parties, the external users, can be able to take the decisions on the basis of these financial statements. The objective of financial accounting is recording, classifying in order to prepare the profit and loss account and in order to prepare the balance sheet to find out the profitability and financial position. Whereas the objective of cost accounting is recording, classifying, etc. in order to ascertain the cost, in order to control the cost. So both departments, both the accounting system are entirely different. Now the question arises, why this cost accounting system has been propounded? This cost accounting department system has been propounded because there are some limitations of financial accounting. So in examination, you may get a theory question regarding what are the limitations of financial accounting. The first limitation, historical information. In financial accounting, the recording is made of the historical data. Whatever had happened in the past, that will be recorded. That means the future expected transaction will not be recorded. So that's why this financial accounting is called post-mortem accounting. That means already expenditure is incurred, now we are recording. So it will not be of much help to the management. Management requires the information, that means the accounting data for the future also. But financial accounting will give the information only about historical. Second, no classification of information. The financial accounting will give the overall view of the business. Suppose a company manufactures some 5 products. All the 5 products are sold. That means the financial accounting will give the overall profitability of all the products. It will not give the individual profitability of different products. So overall information will get classification of different information will not get. No standards. In financial accounting, there are no norms. There are no standards through which we can be able to compare. So we can make the comparison only with the last year data with the current year data. But we don't have any standards or norms. So we cannot be able to control the activities. No idea of efficiency. Whether material or labor, are we using efficiently or not? Is there any scope of wastage? Can we avoid the wastage? Can we take the corrective action? That cannot be done with financial accounting because there are no measures, no standard for measuring the efficiency. No aid to decision making. In a number of cases, the management has to take a number of decisions like whether to make or buy the product, what is the product mix, how to fix the selling price. Number of decision areas are there where financial accounting will not help the management. So financial accounting particularly is there only for external purpose. This is more beneficial for external users like investors, creditors, government, etc. Whereas for insider, for management, this financial accounting is not of much help. Next comes no classification of expenses. Expenses are not classified regarding the behavior, fixed cost or variable cost, because some costs are controllable, some costs are not controllable. This type of classification is not made in financial accounting, so it will not be of much help. Next, does not aid fixing the selling price. For fixing the selling price, we need the cost data, but the cost data is not provided by financial accounting. So financial accounting will not be of much help to the management regarding fixing the selling price. That's also one of the limitations of financial accounting. Does not aid. No scope for performance appraisal. So financial accounting will not help the management in appraising the performance of different departments, different activities. So these are some of the limitations of financial accounting due to which the cost accounting has been developed. So in examination, they may ask you the theory question regarding limitations of financial accounting. Next come differences between financial accounting, cost accounting. Many differences are there. The objective itself is different. So first, overall profit versus profit of each activity. The financial accounting will give the overall profit, the complete whole profit of the organization. Suppose the organization have different departments producing different products. So we cannot get the profitability of each activity. Whereas cost accounting will provide the information of all the individual separate activities. Secondly, periodic reports versus report as and when required. The financial accounting will prepare the reports only at the end of the year. The balance sheet, profit and loss account will be prepared at the end of the year. Whereas cost accounting will provide the reports as and when it is required by the management, or periodically, like every month, every fortnight or every week. So periodically it will prepare the reports, cost accounting. Next one, reports for external information. Normally financial accounting will prepare the reports for external users like creditors, investors, bankers, government, etc. Whereas this cost accountant mainly will produce the reports for the help of the management internally. Next, financial accounting is meant for historical data, whereas cost accounting will use historical as well as future data, predetermined data. That means estimated data. So this financial accounting mainly will use the past historical data. Whatever had happened in the past, that will be recorded. Whereas in cost accounting, they will use the present data as well as the future data. That is the difference. Next one is financial accounting do not provide adequate control over material, labor and overhead cost. See here, in order to control the cost, we want the efficiency of every resource. That means material, labor, overhead. So the material, labor, overhead cannot be controlled. The cost cannot be controlled by having financial accounting. So these elements of cost can be controlled only with the help of cost accounting. Next, financial accounting is kept to meet the statutory requirement. According to Companies Act, according to Income Tax Act, it is statutorily required to maintain financial accounting. Whereas cost accounting is voluntary, we can maintain, or it depends on the management. Then stock is valued. In case of financial accounting, stock is valued at cost price or market price, whichever is lower. Whereas in cost accounting, the stock is always calculated at cost price. That is the difference. Last one, in financial accounting, only monetary data is recorded. Only in money terms, the data is recorded. Whereas in cost accounting, even non-monetary data is also recorded. Example, units are recorded in cost accounting. So these are the differences between financial accounting and cost accounting. The question frequently asked in examination regarding the differences between cost accounting and financial. Now, methods of costing. See here, there are different methods of costing applied in different industries. They are, according to the nature of the business. The business nature is not same for every type of organization. Some business are manufacturing, some are trading, some are providing the service. So the nature of every business is different. So we don't have a single method of costing which can be applied in all organizations. We have different methods. So some of the methods of cost accounting, here I am explaining job costing. Job costing is a method of costing which is applied where The job is prepared according to the specification of the customer. The goods are not produced for stock, but the goods are produced according to the order given by the customer. The customer comes to the businessman, to the producer, and will give the order that I want so and so type of product. So accordingly the producer will make the product and give it to you. That is called job costing. So this type of industry, this type of costing will be applied by printing, repairing, machine tool manufacturing, etc. So this type of business, they will apply job costing. They will not produce the goods for stock. They will produce on the specification of the customer. Next comes contract costing. Contract costing is also just like a job costing. It's this method of costing will be applied by construction activity, constructing the building, constructing the road, constructing the dam, constructing the bridge. So constructional activity they will apply contract costing, in which the contractor will complete the work order according to the specification of the contractee. There is an agreement between the contractor and the contractee. So the work will be done not at the factory, but the work will be done at the site. So most of the expenditure incurred by the contractor is at site. So that is called contract. Process costing is a method of costing which is applied in those industries where goods are manufactured in different departments, in different processes. So every department will be treated as a process, and the cost incurred will be charged to that process account. The output of one process will be transferred to the next process. In other words, the output of first process will become input for the second process. The output for second process will pass on to the third process. Like that, the production will carry on. So example of industries where this process accounting will be applied is like sugar industry, like paint industry, etc. Next is unit or output costing. Unit or output costing is a method of costing which is applied where where only one product is manufactured, only a single type of product is manufactured, not multiple. Then we can calculate what is the cost per unit, what is the total cost in this case of single or output costing. Operating costing is a method of costing which is applied where service is provided. Goods are not produced, but service is provided. There we apply operating costing. Multiple costing. It's a system in which more than one method of costing will be applied. That means more than one method of costing is applied, then it will be called multiple costing system. So these are the methods of costing. Now techniques of costing. The costing techniques are different. Example, first one, historical costing. Historical costing is a system of costing in which only past data is recorded, not future data. Only presently whatever cost has been incurred, after incurring the cost, then only it will be recorded. It is called historical costing. It is called post-mortem costing. Next is marginal costing. In marginal costing, we differentiate the cost between fixed cost and variable cost. Fixed cost and variable cost. So marginal costing is also called variable costing because we focus only on variable cost. The fixed cost will remain constant, will be same. That means first we calculate contribution. From sales, we deduct the variable cost to get contribution. From contribution, we deduct the fixed cost to get the profit. This method of costing, of segregating the fixed cost and variable cost, is called marginal. Direct costing. Direct costing is also a type of marginal costing where we take into account only a direct cost, the cost which is specifically incurred to make the product. So all direct cost will be collected. Indirect cost will be written off from the profit. Next one is absorption costing. In absorption costing, we will not differentiate between direct cost and indirect cost. All the cost will be clubbed together. That means we will not differentiate between fixed cost and variable cost. The total cost is called absorption costing. Next one is standard costing. Standard costing is a predetermined costing. That means the cost is recorded in advance. Before incurring the cost, we record the cost. That is called standard costing. Uniform costing. If the same method of costing will be applied in a number of industries, so that all the industries can compare the costing information. Then it will be called uniform costing. So these are some of the techniques of costing. Now cost concepts. The cost concepts are three: cost, cost unit, and cost center. The cost means the expenditure incurred or to be incurred, whether it is actual expenditure or notional expenditure, incurred or attributable to a particular activity, that is called cost. Simple example, the cost incurred to produce the goods or to provide the service is called cost. Expenditure incurred to produce the goods or to provide the service is called cost. Cost unit. The cost unit is a physical unit on which the cost is incurred. Example, in case of a cloth, the cost unit is meter of cloth. So how much expenditure incurred to produce a meter of cloth? Similarly, in case of cement industry, the cost unit is 1 ton. So for making 1 ton of cement, how much cost will be incurred? These are called cost unit. It's a it's a part for which the cost is incurred. Cost center, it's a location, it's a department on which the cost is incurred. All the cost will be accumulated for a particular location, particular department. Next comes classification of cost. The cost is classified according to different criteria. On that basis, natural classification. The natural classification means the cost is classified according to the nature. That means material, labor, overhead. If we classify the cost into material, labor, overhead, it is called natural classification. According to the nature, we are classifying. Second, behavioral classification. According to behavioral classification, we classify the cost according to the behavior, according to the level of activity. The cost is changing according to level of activity. If we produce more output, more cost. Less output, less cost. So it means it's a variable cost. If the cost is remaining fixed, whatever be the level of activity, it is called fixed cost. So according to behavior, the cost can be classified as fixed cost, variable cost, or semi-variable cost. Fixed cost, the cost will remain fixed whatever be the level of activity. Variable cost, the cost will change according to level of activity. Semi-variable cost, partly fixed, partly variable. By traceability. By traceability, we can classify as direct cost or indirect cost. The cost which is specifically applied to a particular product is called direct cost. And the cost which is commonly applied on all the products are called indirect cost. Control. According to control, some costs are controllable, some are uncontrollable. The costs which are in the hands of the management, that means the management can reduce the cost or increase the cost, controllable. Some costs like rent, it is completely fixed. Management cannot change the cost. As per financial accounting, we can say costs are classified as capital cost or revenue cost. Revenue cost means the cost which is incurred to maintain the profitability of the business. The cost whose benefit will expire within a period of 1 year are called revenue cost. Whereas capital cost, the expenditure incurred to purchase the fixed asset. Next, by normality. We can classify the cost into normal cost and abnormal cost according to normality. Functions. According to functions, the cost can be classified as production cost, administration cost, or selling and distribution cost. Last one, by time for ascertainment of cost. According to ascertainment of cost, according to time, we can classify as historical cost or predetermined cost. Historical cost, already incurred cost. Predetermined cost, to be incurred cost. So these are the different classification of cost. Lastly, elements of cost. The elements of cost are material, labor, direct expenditure, and overhead. Material, the main item which is used to produce the goods, the main commodity which is used to produce the goods are called material. The material are classified into direct material and indirect material. The material which is specifically incurred to produce the goods are called direct material. Example, wood is used to make the furniture. So wood is called direct material. Indirect material, the material which is not specifically incurred on a particular product but on all the products. Example, glue, Fevicol, which is used in making furniture. So it is used in making all furniture. Indirect material. Labor, the labor which is specifically incurred in producing a particular product, the labor engaged in manufacturing a particular product, direct labor. Indirect labor not related to a particular product but to all the products, indirect labor. Direct expenditure, the expenditure specifically incurred in making a particular product. Then overheads. Overheads are all indirect expenditure, indirect expenses. Indirect expenses are called overheads. Overheads are classified into factory overhead, administration overhead, and selling and distribution. The indirect expenses incurred in the factory are called factory overhead. The indirect expenses which are incurred in administration management department, that is called administration overhead. The expenditure, the indirect expenses incurred in sales and marketing of goods, that is called selling and distribution overhead. So this is the end of the topic, Introduction to Cost Accounting. So these two videos I have prepared, part 1 and part 2. If you watch all these two videos, definitely you can be able to write the theory question in examination regarding the first unit, first topic, cost accounting. So if you are satisfied with my lecture, give a like to the video. Share this channel in your group, in your friend circle, so that more students can watch the video and enhance their knowledge. Give your comment on these videos, and lastly, don't forget to subscribe my channel.